All right. Hey, everybody. Thanks for tuning in to another episode of BlockFi Live. We have some awesome guests here with us today. We've got Nick Carter and Matt Walsh from Castle Island Ventures. Not only are Nick and Matt some of the smartest investors that I know in the crypto space, they're also investors in BlockFi. And one of the pieces of feedback we got from you was that you wanted to hear more from some of the investors in BlockFi. So we took that feedback. We reached out to Matt and Nick, and they were kind enough to agree to come on the show. So, guys, thank you so much for coming.
Thanks for having us,
Our
Zach.
pleasure.
It's nice to see your face.
Yeah, definitely. We were just catching up on how everybody's doing through the quarantine, and Nick and I agreed that Matt is doing the best because he has a suntan right now. He wasn't as tan the last time I saw him.
I've been trying to get out running. I've got the sunburn, I think was a better way to say it.
Well, let's start with just y'all's professional background. So prior to Castle Island, what were you doing? And I've got Nick on the upper half of my screen. So Nick, let's start with you and then go to Matt.
Okay. Well, most people probably know, Matt and I worked at Fidelity before starting Castle Island in summer 2018. And before Fidelity, I'll let Matt elaborate on that a little bit. Before Fidelity, I was in business school. So I was studying at the University of Edinburgh. I was also running a project called Coinmetrics at that time, which is a blockchain analytics website, which is now real business. And before that, I was actually a journalist. I wrote about corporate law. So we've all got our strange paths to crypto,
Indeed. What about you, Matt?
So before crypto, I was actually a management consultant. So coming out of undergrad, I worked for a company called Arthur D. Little. I worked in their private equity practice. So looking at middle market transactions, and the model was that we would look at the prospective transaction and then we'd go into the portfolio company after the deal was done and do strategy work. So I did that for a while. And then I worked for a company called Clear Channel, which is now iHeartRadio, worked as part of their strategy group. And then I went back and got an MBA from 2012 to 2014. It was during that time that I got really into Bitcoin, and then took a job at Fidelity working in their corporate strategy group, and had the really good fortune that one of the first projects that I was asked to work on was actually a project that put us squarely back into this Bitcoin path. And so it was a scenario planning exercise and looking at some of the disruptive potential of blockchain technology and what impact that would have on the firm. And that began this wonderful journey of R&D over the course of a few years that eventually led us to starting an internal fund and eventually led us to starting Castle Island.
That's great. So was liking Bitcoin before you joined Fidelity part of your interview process to them when they were interviewing you? Were you feeling out the folks at Fidelity for how open they might be to doing some work with Bitcoin?
It was funny. So it wasn't really on anyone's radar when I was interviewing, and I don't think really anyone in the group that I was hired into had any idea about Bitcoin. There was this guy, Sean Belka, who was running Fidelity Center for Applied Technology, and he had made this big company presentation about a year before I joined around, we should be paying attention to Bitcoin. This is a potentially new disruptive paradigm. And then in 2014, I was lucky enough to get put on a project with the senior team at Fidelity. It was led by a guy named Peter Jubber, called Scenario Planning. And we were looking at a variety of disruptive scenarios. And the idea was basically look at technologies that could change what Fidelity looks like 10 years from now. And so artificial intelligence was on that list, robotic process automation. And there was this idea of looking at what would we do if the technology behind Bitcoin were to enable peer-to-peer value transfer. We called it frictionless capital markets at that point. And it was really early. It was before Ethereum had launched public mainnet. It was before these private blockchain consortiums were a thing. But the idea was at the very easiest and earliest stage, it was really just the idea of looking at what a peer-to-peer transfer of value would look like in capital markets. And that became this really wonderful journey of just understanding Bitcoin at a really detailed level, understanding where in the firm there might be opportunities, eventually led to a number of business units incorporating Bitcoin in some capacity and working on a number of projects.
Yeah, that's great. It's been really incredible personally learning about all the different things that Fidelity has done with crypto. And we recently had Christine Sandler from Fidelity Digital Assets on the show, which was an awesome episode. Definitely check that out if you haven't already seen it. So talk to us about the kind of beginnings of Castle Island. So y'all are both at Fidelity. Did y'all know each other before you got to Fidelity, or did you meet each other at Fidelity, and then how did you come up with the idea for Castle Island and decide ultimately to spin it out as its own separate entity?
Yeah, it's a funny story. Nick, maybe I'll start it. So, at one point we, as a firm, we had a list of about 45 different use cases and ideas for blockchain technology, and we started to pilot them. And so there've been some, this has been publicly announced that Fidelity was mining Bitcoin as early as 2015. We were putting Bitcoin in the cafeterias. We were sending executives around the city of Boston with Bitcoin wallets, trying to buy things. We tried to issue a corporate bond on a private blockchain. So there was just so many things we were trying, and there was a great labs team behind that and a great strategy group behind it. And at one point, we made the decision to start a proprietary fund, which we called NDA at the time. It stood for Network Defined Assets. And so my colleague, David Kanitsky, and I were working on this, and we had the ability to hire out a team to put this into practice. And it was really a precursor to Castle Island with some of the strategy elements. And I was actually talking to a friend of mine, Chris Bernisky, who runs Placeholder VC, but who was then at ARC. And we were talking about, I think we were actually talking about the NVT ratio, the network value to transactions ratio, on like a Friday night at like 7 or something. So really kind of a dorky conversation. But I had just read this really interesting blog post by this guy, Nick Carter. What was the name of the website, Nick, that you were
Crypto Fundamental.
Crypto Fundamental. And so we were talking about this blog post that this guy Nick Carter had written, and he was like, "Oh, I know that guy. Like, I'm happy to introduce you." And so David and I called up Nick, and we just talked to him for about an hour about network data. And at the end, we sort of very overtly hinted, "Hey, if you ever want a job, like, let's get you hired up at Fidelity." And he was just kind of like, "Yeah, okay, I think I'm just going to keep on like hanging out in my parents' basement." Just ignored us, but called us back and said, "Hey, if you were hinting about this job, I might be interested." So that really was, I think that was the origin story, if I got that right, Nick.
Yeah, I mean, there's a lot more to it, actually. The whole Bernisky ARK Invest story has got lots of twists and turns in it as well. But the like funny anecdote there is that my girlfriend was like eavesdropping on the call I did with Matt and David. And at the end of it, she's like, "Yeah, I think they were like trying to hire you or something." And I was like, "No, like, I don't think so. I think it was just like, we were just chatting." She's like, no, you should like definitely call them back." So yeah, I didn't realize that was the intent.
So Nick joined, and we were running this private pilot fund under Fidelity's umbrella. And at a certain point, Nick and I really sort of just saw the opportunity to do something a little bit more entrepreneurial and to step out. And we're still able to maintain a great relationship with Fidelity along the way, and they've supported us through this effort. So it's great, and we've been co-investing with them throughout this time at Castle Island. But it's been great to have been working on this technology at a firm that's so supportive of not only what we're trying to build as entrepreneurs, but just the ecosystem in general. So you mentioned Christine and Tom Jessup's team that are doing great work over there. And there's other parts of Fidelity that are also working on this technology. And it's a really committed group. And it really, it's been a real blessing for us to have started our careers there.
All right, so now let's talk just about Castle Island. So you decide that you're going to leave Fidelity, spin out, and raise money specifically for Castle Island, which is a venture investment firm. Tell us a little bit about when that happened, and maybe give us a little taste of the pitch of the the value prop that you talk about when you're speaking with some of the investors in Castle Island.
Yeah, Nick, do you want me to start it and then you hop in?
I can start it off. So
go ahead.
We'll spare you the whole pitch. But basically we sat down and we thought carefully about how we thought value accrual should work in this industry and this asset class. And we were pretty convinced that tokens were actually not the best mechanism to actually capture value on a sustainable way with functional governance and so on. And it was our view at the time, which was controversial back then, not very controversial today, that conventional startup equity is absolutely the best way to effectively capture value in this industry. There's a whole bunch of heterogeneous ways to create value, but in terms of actually sustainably deriving returns from investments, we felt that tokens were actually not the play, and that startups building foundational infrastructure for the industry, specifically with respect to financial services, was really the most important category, and we very much adhered to that over the last couple of years.
And where are we in time now? So you mentioned that it was a bit of a not the accepted investment case from everyone when you had this idea that traditional equity was a better investment than tokens. Are we in 2017 or 2016 or 2018?
So the ideas, we'd been kicking them around during this like pilot fund at Fidelity before this, but we actually raised the fund in 2018. And I mean, it depends who you talk to. Like some people will say no, like that's a very like obvious point, but it wasn't like that obvious. Token sales were still going strong. Entrepreneurs were still finding it really easy to raise capital that way. A lot of the funds in Silicon Valley specifically were exclusively targeting tokens. Equity was kind of like a dirty word. And instead we were like, wait, hang on a second. Like we accept that there is this like monetary revolution underway. Potentially we're separating state from money. That's really important. We think maybe the best approach here is to finance the entrepreneurs that are building the financial plumbing for this asset class. And that's basically what we did.
And so you guys launched the fund. Talk to us a little bit about how things have gone since you launched it. What types of things you've invested in? Have you stuck to the equity only, no tokens thesis? And feel free to mention a few of the specific companies that Castle Island's an investor in.
Yeah, it's been an exciting almost 2 years. So we launched the fund with the idea that we'd invest in 15 to 20 companies, and they'd be broadly in two big categories. One would be financial market infrastructure to support public blockchains. So to us, that means things like custody, exchanges, trading technologies, data companies, really companies that don't require you to take necessarily a directional view on the underlying asset, although we certainly have strong opinions on which of these assets are viable or not. So we're investors in data companies like Flipside Crypto and Coinmetrics, Zen Ledger, in the trading technology space, Talus Trading, ErisX, obviously BlockFi, brokerage technologies. Then we're really interested in companies that are building things on top of public blockchains. And to us, these look like traditional business models. There could be an enterprise sales business model that just requires a public blockchain in order to attest or to notarize that something has happened. And so a good example there might be Dust Identity, which is working in the supply chain management space with a technology that allows them to timestamp when certain things have happened on the course of a supply chain. We have another company called Attestive that is working on deep fakes actually within the insurance industry. And so they can authenticate whether or not a photo is legitimate. And then they'll just timestamp that record in order to get the actual time that it was taken onto a public blockchain. So we really like that intersection of companies that have real business models, but a public blockchain makes their business better. Nick, I don't know if you'd add anything to that.
Yeah, that's right. So, we've been scrutinizing every corner of the industry for a while. And I'd say we're a little bit skeptical of the quote unquote applications that have emerged so far. A lot of these applications feel like trying to build Netflix in the internet of 1995. Maybe the capacity isn't there to support them just yet. Maybe the penetration hasn't occurred yet with the consumer segment such that these applications make sense. But the one application that's easy, scalable, is understood by lots of entrepreneurs, and actually is highly value creative for a lot of normal kind of non-blockchain business processes, is just using the guarantees, the assurances of something like Bitcoin as a trusted immutable audit log, which doesn't really exist elsewhere. There's no notary in the sky that can attest to some information which everybody collectively can agree something actually happened at a specific time. So as far as the applications of, blockchain, so to speak, goes, that's one that actually makes a lot of sense, I think. But yeah, the other side of that is we're pretty focused on, Bitcoin and crypto as an asset class, and, helping people actually use it in a, financial monetary context. That's the main thing that it's for. That's what we've seen so far. The killer apps we've seen so far involve savings technology, remittances, large value transfer, all of that. So we try to, tune our investments accordingly.
Yeah. So a couple follow-up questions there. Matt, you mentioned that you certainly have strong opinions on the assets, other than being bullish on Bitcoin, which I think is a given based on some of the comments Nick just made. Are there any other assets that y'all are bullish on, or is your thesis as it relates to, the different assets that investors can potentially buy in public markets, that you're mainly Bitcoin bulls and not too much excited about other stuff? Or
I'd say that we try to stay very open-minded. We're definitely both in this John Pfeffer school of evaluating, where value would accrue on a crypto asset, and I think that that's a really, and I can go into a little bit more detail. So John Pfeffer wrote this really great paper, I guess it was almost 3 years ago now, called "An Institutional Investor's Take on Crypto Assets."
Mhm.
And he basically looked at how you might model out a valuation scheme for any of these assets. And it kind of goes back to what people have been talking about, monetary base equals the price times the quantity over the velocity. And the argument would be that if a crypto asset does not really induce a reason to hold it or to hoard it, then the velocity ought to be quite high. And so you could imagine a world where a number of these utility tokens actually work, but there's really no inducement to store your wealth in them. And so it might follow that if they were to work, then people would only provision that asset on a just-in-time basis, really driving up that velocity and therefore driving down the monetary base.
Mhm.
So I think I speak for both of us that we're really open-minded to the technology, and there's a lot of interesting projects out there. But if the crypto asset itself is not used as a savings technology, it's really difficult to see where that exponential growth and venture-like returns would come. So assets that are competing to be non-sovereign money are really interesting to us. I'll also say, and Nick can go into a lot more detail on this, that stablecoins are really interesting. So US dollars really on a blockchain fit this compatible investment thesis. Not that we would invest in dollars, but some of the infrastructure supporting the build out of that ecosystem around stablecoins and driving the dollarization of other economies. We think that a massive amount of value is going to accrue there. So we are open-minded to investing in crypto assets that have the potential to be that non-sovereign money, but largely just focused on the infrastructure opportunities, because we do see a world where a number of these utility token networks and smart contract platforms, they might work, but we'd just rather have equity investments in some of these picks and shovels businesses building in their ecosystems.
Yeah, so I want to segue into that stablecoin use case and some of Nick's thoughts on Bitcoin banking. One last question on Castle Island specifically, and the investment that you guys make, in case there's folks out there watching who have either already started a business in the cryptocurrency space or are thinking about starting one. When does Castle Island typically get involved with folks? Are you, someone that an entrepreneur should call as one of their first phone calls when they have an idea, or do you typically get involved later stage after a company's been around for a while? How do those kind of characteristics look like for you guys in terms of what's interesting for you to invest in?
So the vast majority of our investments have come early. So we invest pre-seed and seed largely. There've been a couple exceptions. I wish that we invested in your idea the very first day we met you. And that's been something we've actually discussed going back and forth around some of the regrets that we have, is just not backing some of these companies a little bit earlier. But we're typically writing pre-seed and seed investments. We are comfortable investing pre-product, and that's where we spend most of our time.
Got it. That's great. So stores of value, things that could be, disruptive to existing monetary instruments, things that power stable coins. There's a lot of kind of tie-ins to banking infrastructure when you think about the distribution of stable coins. And Nick, you've done a great job covering some of this stuff on Castle Island's podcast, which is On the Brink. Definitely check it out if you haven't already. I listened to one where you had, I'm forgetting his name now, but a professor on there. It was one of a series of podcasts covering Bitcoin banking. Maybe, start at square one and just help folks understand a little bit this natural tension that I think sometimes occurs in the crypto community between folks who believe that banking like financial services should exist for Bitcoin, and maybe other folks who think that that's a bad thing. And then go into a little bit about what you guys are seeing and how your thesis has developed there as you've talked to some of the smartest minds in traditional economics and in cryptocurrency about this subject.
Sure. Yeah. So this is a debate that long predates Bitcoin, I would say, especially in Austrian circles. So you have this raging debate between, call them the Rothbardians, and then the more moderate, like, Milton Friedman, Hayek types. And the crux of the debate has to do with is anything other than full reserve banking legitimate, or is fractional reserve banking inherently fraudulent? So that's effectively the topic of discussion. And then it's those ideas like very much like impregnate the early thought around Bitcoin. Satoshi makes reference to things like credit bubbles in Satoshi's early writings. Hal Finney talks about Bitcoin banking. He references George Selgin's work on free banking, how you don't necessarily need a government to guarantee a banking system. You don't necessarily need deposit insurance. Free market forces work these things out, even in a fractional reserve context. But there is very much a hardcore strain of thought in the Bitcoin community, which has to do with the idea that it's illegitimate to have a fractional reserve. And so I started to really think carefully about this when I realized that exchanges in crypto are effectively a form of banks. And they are custodial institutions. They take Bitcoins. In some cases, they might give you a credit card to spend with, or a debit card. In some cases, they give you access to interest-bearing products, although that's not fully widespread yet. So there is reintermediation occurring in crypto, whether we like it or not. And if you add it all up, there's something between 20 and 25% of Bitcoins are held with exchanges or third parties. North of 25% of all Ether are held with exchanges or custodial intermediaries. So it's not a question of like ought, it's a question of is, in my opinion.
Mm-hmm.
Is there effectively a demand for intermediated financial services that resemble banking? And the answer to that is a resounding yes to me. The other side of it is recognizing the limitations of a public blockchain. We do fundamentally have these scalability limits, which have to do with the amount of transactions that a single piece of hardware can ingest, and meaningfully audit in a given period of time, right? So there are just physical boundaries to the number of transactions that a flat system like this can process. If we acknowledge that those boundaries exist, and I think we should, then we need to think about how we can layer that system, because that's how all sophisticated functional payment and settlement systems work. They work in layers, and banks are a part of that layer. Of course, the problem is, like, if all Bitcoins are held in a custodial setting, then you have a problem, right? You're just back where you started. But I don't think we're going to get there. So I'm very much of the school of thought that it's okay to have effectively the issuance of credit on Bitcoin in a bank-like setting. It's okay for there to be custodial deposit-taking institutions. And it doesn't, obliterate the value proposition. Far from it. It actually helps Bitcoin scale. It gives users a different way to interact with the base asset. It actually takes advantage of Bitcoin's really, really nice qualities, which are auditability, the inability to counterfeit it, scarcity, but really the auditability, which is what makes it for really powerful collateral. Yep. So my thinking here is, what if we reconfigure the argument away from, okay, let's just use Bitcoin as a P2P transactional layer, because that just fundamentally doesn't scale, and more towards, what if we take advantage of Bitcoin's really nice qualities as this high-powered collateral against which we can maybe issue credit, or just effectively, add layers to that system so that it functions more effectively. So that's kind of the school of thought behind Bitcoin banking.
Yeah, that's great. And I agree with everything that you just said there. So that was a lot of the implications for Bitcoin banking. What about stable coins and the distribution of those via blockchain based payment rails? I know you've covered that topic a little bit as well in this same series, and things like dollarization happening in other economies. Talk a little bit about the research you've done there and what types of functions or things we might see happen in markets as a result of increasing stablecoin adoption.
Well, it's so interesting because it's almost like as a side effect of the existence of Bitcoin in the crypto industry, we have now crypto financial infrastructure in virtually every country on earth. Not just exchanges, like local exchanges, but also wallets that work and normal people know how to use. So that was like subsidized by the crypto industry. And fundamentally, that is the instrument of dollarization. It's a little access point for dollars in virtually every country on earth that has access to the free internet. The implications of that are really extreme, I think. It means potentially, let's say dollarization is accelerated by the existence of the crypto industry. That means that monetary discretion might be impaired in certain countries with weak and kind of unsound monetary policies. Potentially, these dollarization events could accelerate and be destabilizing, but maybe also have very strong welfare gains for individuals that are fleeing to the dollar. To me, like people talk about how, Bitcoin or crypto is going to destroy fiat currencies, but I think it's actually really going to entrench the strongest and most in demand fiat currencies like the dollar. Now, the question is like, what will be the instrument of this dollarization? Will it be Bitcoin-backed dollarization? People are making synthetic dollars with Bitcoins, which is really interesting to see. You also see Ethereum-backed dollars, like DAI is mostly Ethereum-backed. And then you also just see stable coins, which are issued by shadow banks in some cases, or regular old FDIC regulated, US regulated banks. So we have like the 4 or 5 different kind of methods to create the product that people have this demonstrated demand for, which is dollar denominated risk. I don't think the jury's still out basically on which is going to be the most popular method to issue them. So far, the shadow banking approach seems to be the most popular, which is kind of funny.
Yeah, and just in case anyone's not familiar, the term dollarization refers to a economy that doesn't use dollars as its primary currency, shifting over to using dollars either by society, like people driving it, or the government making a decision to switch. And you've covered some of these really interesting examples in some of your podcasts, Nick, like Ecuador. And what are some of the other countries that have do this process?
Many Latin American countries have partially dollarized. There are some that have fully dollarized, like Panama has been fully dollarized for a long time. But if you go to Latin and Central America, you'll find that most of those countries are partially dollarized. You have places like Colombia has a very vibrant dollar economy. The Argentina formerly had dollarization, which was sort of officially ratified, and then there was de-dollarization that occurred. It was actually this big wealth confiscation event.
Yeah.
So there's actually a ton of countries where there's like a low level amount of dollarization. The question is, can it flip to critical, like in the case of Ecuador, and actually compel the government to ratify that and say, okay, the dollar's the official currency now?
Yeah.
Zach, so you were super early on this. I remember having this discussion with you maybe 2 years ago, just around some of the appetite that you were seeing for dollars internationally. I think in the past month, there's been something like $10 billion flowing into stablecoins. Have you noticed it in your business that just that demand for dollars is increasing?
Yeah, we're seeing some really interesting data points on BlockFi's platform in a couple of different areas. One, in terms of the distribution of stablecoin balances at BlockFi and who is more or less likely to have those. And the punchline is that The older you are, or the more, just like in general, folks outside the US on our platform are more likely to have stable coins in a BlockFi interest account, earning 8.6% than someone who's, maybe our age and living in the US. We probably have crypto in our account at BlockFi. The other thing that we're seeing is on the borrowing side, demand for borrowing dollars secured by cryptocurrency is it kind of seems to go through these waves that are a bit regional specific, where folks in a specific market will learn that it's an option to borrow dollars at the same rate that it costs someone in the US to borrow dollars, which is typically dramatically cheaper than the rate that it costs to borrow their local currency. And there's kind of like these little pockets of wildfire or something where it catches on in a certain market, and all of a sudden we notice a massive uptick in dollar borrowing demand from specific regions. A couple of different countries in Latin America already have gone through that process, and we've seen it on our platform. Also, different parts of Southeast Asia, we've seen dollar borrowing activity pick up, and I think that not only as a savings, but also in terms of debt and credit. One of the big reasons why the dollar is king, one of the big reasons why we have such a strong economy here in the US is because our debt and credit markets, while maybe prone to big kind of, cyclical swings, they do work a lot of the time. And if you want credit, if you want debt, it's accessible here. That comes with certain risks, but it also comes with certain benefits. And I think that the stablecoin story will probably be a savings story first. Just help me get out of whatever emerging market currency or the investments that I have access to in my local market. Help me get out of that and get into dollars, get into products that I can access with dollars first. But then over time, it will grow to include debt and credit as a big part of the story as well.
That makes a ton of sense. I mean, one of the things as you're talking that I think is going to be a real catalyst here, and Nick, you've talked about this a lot, is just the fact that this is independent infrastructure. So if you look at a world where China is pushing for a digital dollar that will have or a digital renminbi that will have full visibility into the system, that's pretty incompatible with what the U.S. would want. But certainly that could be seen as a pushback against the U.S. financial-led infrastructure with SWIFT. But what we have with stable coins is really a public infrastructure. So in a lot of ways, I think that's going to be more appetizing to a lot of individuals and perhaps even countries as we go forward.
Yeah, I mean, the corporate use cases and also the central bank or kind of political use cases are really strong as well. So a couple questions. I know we're coming up on time. Couple questions to wrap us up. So just hit the key points. You invested in BlockFi. Folks asked us to bring BlockFi investors on the show. What made you do it? What were the things that you saw in BlockFi's business that made you want to put Castle Island's capital into the company as an investor?
Yeah, so we look at people, market, product. And so from the people perspective, we were just incredibly excited to work with you and Flory and Renee and the team that you've built out, and think that you're a best-in-class team. From the product perspective, Nick and I have been users of the product for a long time, since before we were investors. So have rolled up our sleeves and really love what you guys have built. And then from a market perspective, we just are incredibly bullish on this brokerage, lending, financial services category. We think that there's no world where public blockchains are a thing and there isn't a multi-billion-dollar, just an enormous company built in this category that you're operating in. And we think that you're the market leaders for what you're doing. And so really excited to see you continue to add products with the trading platform and the credit card coming out soon to really further kind of build out your presence in some of those markets. So for us, it was all about great people with a product that we really understand and like in a market that is just growing really large and a chance to invest in the category leader.
Yeah. That's awesome. Oh, go ahead, Nick.
Just to add to that, we covered it a little bit, but BlockFi was one of the earliest startups to acknowledge that there will be capital markets and credit markets developing on top of public blockchains and cryptocurrencies. And not only is that an inevitable phenomenon to us, that's a necessary component of the growth of crypto and of Bitcoin. And allowing individuals to get interest-bearing products on their crypto is an absolute no-brainer. And so it just makes all the sense in the world to invest in the market leader.
Yeah, I mean, a lot of the stuff that we built has been stuff that I just wanted personally as a Bitcoin holder. So earning interest on it was something that I was like high-fiving myself about when we launched it. But thanks for sharing that sentiment. I'll ask this one to both of you. Give us some predictions or other trends that you're seeing. You know, either whether or not you're bullish on the Bitcoin price over the next 5 years, or something that you think we'll see the ecosystem have available that maybe isn't here today. Where do you guys see us headed? Not BlockFi, just industry in general.
Want to go first, Nick?
Yeah. Okay. I'll start. So I think the crypto industry will be credited with bringing down multiple governments in the next 5 years.
Wow.
So I think many sovereign currencies will collapse, and their collapse will be blamed on crypto. I think the main agent of that destruction will be the US dollar, which will be accelerated on these hyper efficient global rails for commerce and for settlement. I also think it's going to result in the flattening of labor markets in a sense, because we now have this really interconnected way to conduct commerce online, which didn't really exist before. Like, you try sending a bank wire from the Philippines to Mexico, I don't even know if it's possible.
It's a nightmare.
So the fact that we now can denominate commerce in these global units, which are understood by all, I think will really unlock a lot of human potential and the ability to work together online, independent of borders. And I think governments will be forced to acknowledge that.
I think that's a great one. The collapse of nation states is definitely one that I've talked about. So maybe I'll throw a few at you. So I think we're going to see a lot of companies that just build traditional businesses that utilize the guarantees of public blockchains as notary systems. And I think that could be applied in any number of industries. We're looking at death tech companies that are kind of tracking ashes on the blockchain. There just a lot of things are going to start to happen in that realm, and they'll be on public blockchains as opposed to like the IBM pretend private blockchains. Mm-hmm. I think that you're going to start to see some institutional adoption towards the end of this year and the beginning of next year. It's getting to the point now with broker dealers and banks that it's not excusable to have the point of view that just public blockchains are not a thing, or they're this fringe thing. It's getting to the point where you see the growth rates of BlockFi and Coinbase and all of these brokerage and trading platforms, that right now it's pretty clear that there's a lot of traditional firms that are just ignoring their customers. And I think this is further validated by the Fidelities of the world moving in on the custody and trading side and offering some of these services. Yeah. So if I had to make a prediction there, is I think we're going to start to see some more regulatory clarity on the definition of custody for cryptographic assets, and that's going to open the doors for a number of SEC regulated entities to actually get involved for the first time. I think from there you start to see a lot of M&A and a lot of build versus buy decisions. And on the heels of that, I'm optimistic that the spot markets will continue to mature in a way that is compatible with the U.S. financial system. And eventually we'll see asset managers make strong pushes with exchange traded products and things of that nature. One common thing that you've heard from both of us, I think there's a lot of value at the intersection of regulated financial services and public blockchains. I think we're going to start to see more and more of that unlocked over the next 18 months.
Yeah, that's great. I agree with all of those predictions. That's some great intelligence, guys. Thank you for sharing it. So last thing before we wrap up, where can folks find you if they want to engage with one of you individually or Castle Island more broadly? Where can they look you up?
Go ahead, Nick.
Yeah, so our firm you can find us online, castleisland.vc. That's Victor Charlie. We're both on Twitter as well. So I'm Nick__Carter. That's 2 underscores. Very
I'm Matt
important.
Walsh in Boston.
Yeah, we're online in a bunch of other places, but that's probably the best place. My DMs are always open, so hit me up.
And check out our podcast, On the Brink.
Awesome. Guys, thanks so much for coming on the show. Another quarantine episode in the books. I'm going to have to get one of your fancy podcast mics at some point if we're not back in the office soon. Really appreciate it and hope you have a great rest of your day. Thanks.
Thanks, Zach.
Thanks so much, Zach.